The fourth quarter was pretty rough last year. How do you handicap this year's fourth quarter, and do you think trade could once again provide a catalyst to take risk assets lower?
Well, look, I think the positioning, and again, with all I said about this particular worry, with all I've said about all this, positioning in markets is lighter. The main concern that we had last year was the Federal Reserve was taking the U.S. economy potentially off track. That uncertainty about quantitative tightening, the Fed planning rate hikes 10 through 13 for 2019, those were all very big issues that hampered liquidity at the end of the year in a very big way. The outlook for monetary policy has come nearly full circle. There's a lot more worry in the marketplace right now, and global interest rates have hit all-time record lows while more and more central banks are easing. I think that there is a path in 2020 for recovering in manufacturing and some cyclical repair. I would not say that a downturn is our base case view at all, or that share prices are going to drop from here. But I think policymakers across the board have to be careful at the moment.
Are you surprised that in the third quarter stocks have held up so well, though? We're trading near records. We had a very bumpy August, I appreciate, but July and September have been pretty solid. We're kind of finishing where we started. But nevertheless, all of the headwinds, and they add up to quite a significant group, you would have thought stocks would be lower.
No, I think the corrections over the course of the third quarter were very gentle. And some of the issues that we had were, in fact, quite serious. Whether the U.S. was expanding its trade war beyond U.S.-China, that was a significant worry at one point. And we saw the U.S. react to that in a way that was less disruptive. We saw monetary policy become easier, and we think that that is cushioning the market on the downside. But what we also had is marginal new highs in corporate profits. And while I don't think that the third quarter is going to go down as a particularly great one for this profits recovery in the United States, I think that the path to make at least marginal new highs, a few percent higher in 2020, is very much there. And that's what's going to matter. That plus where we are in terms of credit risk, in terms of interest rates and earnings. You know, if there are going to be some policies that are going to derail that, we'll very much take that into account. But there's a lot more worry now in markets. So I would not expect a repeat of last year's fourth quarter at all.